What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for NEO with the ticker symbol NIO. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So let's take a look at NEO since last week, Friday. What has happened? Well, basically, it's been dead. It went up slightly, maybe like a couple of cents, but overall, it's still not bullish. So I just love getting these neo investors riled up. They just go crazy over this stock. It's like a ride or die, right? They'll just die with it. It's kind of funny. But either way, right? What the technical is telling me, right? It's still bearish, right? Nothing has changed. The long term picture is bearish. The short term picture is bearish. Um, but you can't just look at it just the bearish side of the story, right? Let's look at the bullish side. What's going on for the bulls, right? What's advantageous for them? What's advantageous is this probably 370, horizontal support, because price did bottom back over here. Price came down to the same level, bottomed again, so that was a double bottom. Price went up. Maybe we come back again and see a triple bottom. Okay, well, maybe, right? So that's bullish. I mean, not much else, right? What else are you going to say that's bullish about this chart? And, obviously you can grab like fundamentals, but that's not based in reality, right? Let's just say Neo is like the top selling vehicle in China, right? Or wherever. Well, the technicals aren't aligning with that. And the technicals are more important because it's the price, right? It's the price. Who cares about the fundamentals if the price continues to collapse down lower and lower? I mean, unless it's like something like Bitcoin, right, where it doesn't even matter because it's going to go up forever, most likely. But Neo, I mean, this thing, you have competition, you have a bunch of regulation. I mean, they have to eventually make a profit, right? So are they going to get out of their losing streak? Are they going to get out of their debt and stuff like that? Or are they going to be able to survive? So again, the fundamentals do matter at some point, but the technicals are more important because that's the price at the end of the day, right? That the market is willing to pay for it. The market's not willing to pay $20 for this right now. They're not even willing to pay $5. They're only willing to pay the mid $4 level, and it looks like it's drying up of buyers, and it looks like we could be seeing more selling towards the downside, right? So the technicals aren't aligning with the fundamentals. Sometimes you might see that divergence where it's like it's worth taking that risk, where the price continues to drop, but the fundamentals are really strong. But at the end of the day, the technicals matter the most, right? We care about the technicals because that's what the market is willing to pay, right? It doesn't matter what you think the stock is worth, it's what the market is willing to pay for it. The market is always right. So let's take a look at the chart. Yeah, it's dropping down lower. We have a measurable target for the bears at the 331. The first target obviously will be the 371 horizontal level, but the next one will be the 332, 331 measurable target. Price is still below the long-term trend line. Price is still below these horizontal levels at the $5 level and the $6 level. So that's not good because it was resistance here. Several times price broke out, failed, came back below it, found resistance again. Now we're back below this $5 level, can't get above it, below the EMA. I mean, if you look at like a teeter-totter, and if you put the bears on one side and the bulls on one side, who do you think weighs more, right? Who do you think has more of a weight in this market? Is it going to be the bears or is it going to be the bulls? That's how you look at the market, right? Obviously the bears, right? Uh, dozens of things going in favor for the bears and maybe just a couple for the bulls, based on the technicals. So let's take a look at the weekly chart. So overall, it's just consolidating for more downside. Let's take a look at the weekly chart. Still in a long-term downtrend. Maybe it might come back down to those all-time lows, right? Why? Because if this was the bottom in this bear market back over here, there's a good chance it could be a bottom in this bear market that we're currently seeing. So that's why that would be a good target, and that's sub $2, right? So until we see something change in the market, until you see price break above this long-term downward trend line, you cannot be bullish long-term because this is still in play dating back to June of 2022, right? That's when it started, this trend line. But obviously the bear market started back in January of 2021. So next year, January, would be a 4-year bear market. So if you held on to this stock for 4 years, you basically lost the whole amount, right? Unless you were trading back and forth, selling the rallies, or buying the low, selling the rallies, stuff like that, whatever. But overall, if you've just been buying, holding, you've been down for 4 years, right? If you bought back over here. So overall, just not strong at all, right? Not a strong looking stock. Go choose a stock that looks strong, right? Like Coinbase or MicroStrategy or something else, right? That's in a nice bullish uptrend, right? So you got a nice bullish uptrend. Price pulls back at a nice level, right? To get into the next impulse, right? That's what would be more preferable to do. Instead of holding on to a stock and wishing it goes up, you can just go get a stock right now that is already going up and that you can profit from, right? I mean, that's just what I would do personally. So, all that for Neo on the daily weekly charts. Most likely, I'll give you guys an update next week, Friday. This is Vee Trades, and thank you for your time.